What's up everybody, welcome to my management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And guys, for today's video I have several amazing news. I have to say that we have a huge breakthrough in our case and I'm talking about the RICO case. On top of that, I will show you an announcement of upcoming surprise from Mark Basile in regards to this RICO lawsuit. Then I will explain you a quite interesting point of view how authorities might solve the problem within a blink of an eye. On top of that, guys, and in my opinion it is a real breaking news, SEC just fined several broker-dealers because of their illegal actions on the market. So, and before we dive deep into all of this, guys, please hit the like button for YouTube algorithm and drop me a line in the comment section if you think my videos are valuable for you. So, let's start with this tweet that was published by Dr. E, and he refers to the tweet that was written by Due Diligence just 14 hours ago. And guys, by the way, take a look at this GIF. It is quite funny, don't you think so? And let me show you what did Due Diligence write. I have to admit that Due Diligence is quite a tricky person. It is very difficult to agree with each and every statement that was made by him. But this statement, and I have to admit that I completely agree with this one. Let me quote you it in details. Here's what I don't understand. For 20 months, thousands of people have requested an MMTLP share audit. Over 100 plus members of Congress have advocated for this audit after seeing the conduct of the regulators, brokers and the market operator between December the 6th, 2022 through the present. That audit never took place. Now, some members of Congress, including Ralph Norman and Pete Sessions, have come out to say that they believe MMTLP was a pump and dump. Okay, but show us the share audit to back it up. And guys, I will come back to this statement within just a couple of minutes. Let me quote you further. When a massive amount of people provides evidence in support of a thesis, how do you disprove that? You have to prove evidence to refute the claim. As much respect as I have for elected officials, I will not just go quietly into a night because they say so. In the United States, hearsay is generally not admissible in court as evidence. A share audit must be delivered for me to believe that there is no imbalance. The same share audit that Congress requested themselves, and that the regulatory establishment has evaded, obfuscated and ignored. Bottom line, if there is no imbalance and we have all been duped, force the share audit to prove us all wrong, so we can all go home. Until that happens, we are staying right here in all of your faces. And guys, I completely agree with this statement, and let me go back to this phrase that MMTLP was a pump and dump. You know that just recently, about several months ago, George Palikoros and John Burda were fined because of their potential involvement of this pump and dump scheme. And Rare DD wrote this. MMTLP was actually so-called pump and halt. FINRA published a corporate action that indicated that trading would take place until December the 12th. Was a pump. Jeff Mandel of OTC Markets and Brandon Wickens of Trader TV Live telling thousands of viewers that December the 12th was the last trading day and to expect volatility was a pump. Brokerages like Charles Schwab, TD Ameritrade and more explaining to their clients that December the 12th was the last trading day, was a pump. Then, on December the 9th, before the trading day began, FINRA halted trading, pump and halt. And he added this video where Jeff Mandel tells live that the last trading day should be December the 12th, but it never happened. On top of that, Rare DD wrote this. The line. Purchases of MMTLP executed after December the 8th will not receive the distribution, was included in both MMTLP corporate actions. Some might say it would have been irresponsible to assume this meant it would mean purchasing MMTLP after December the 8th was a possibility. This is why thousands of investors sought clarification from their brokers, if they didn't already get clarification from the VP Jeff Mendel of the market where the security traded. See the post above, and he refers to this video. Purchases of MMTLP after December the 8th were to be limited to closing positions only. An MMTLP short position holder would have been able to buy MMTLP from a long position holder, cancelling the obligation on both sides. If this wasn't possible, why did the brokerages tell this to their clients? Guys, it is a very legitimate question. If it wasn't possible, why did the brokerages tell this to their clients? And in my opinion, we stuck not because of the pump and dump scheme that was performed by John Burda and George Palikras, if they are guilty in this process. But the main wrongdoer right here is FINRA, which implemented this U3 halt. And guys, this is quite crucial question for our case, but it is not the main news for today's video. Let me show you this tweet that was published just 10 hours ago by Junk Savvy. Next Bleach Hydrocarbons files 10Q for Q2 2024. And here is the link. On the official SEC.gov website, and here is this statement in details. And guys, I want to quote you just a couple of paragraphs. Going concern, and it is on the page 12, as you can see right here. At June 30, 2024, the company had not yet achieved profitable operations. The company had a net loss of $1.8 million for the 6 months ended June 30, 2024. The company expects to incur further losses in the development of its business. The company had a working capital deficit as of June 30, 2024 of $48.578 million. These conditions raise substantial doubt about the company's ability to continue as a going concern. And guys, this is the real downside of the current the NBH status, financial status, because they basically don't have enough money to operate even for the next several months. And basically they have just for the 6 months, because if you take a look on their statement, they have cash on hands. Let me show you somewhere here. They have cash on hands about $1.133 million, but they spent for the last 6 months about $1.8 million. This means they have enough money for just 4 months. And this is a real downside of the current situation, because if Next Bridge Hydrocarbons files its bankruptcy, I think all of the MMTLP shareholder will not receive any money from the company. And guys, don't be confused. We have basically two separate parts of this saga. One part is the intrinsic value of Next Bridge Hydrocarbons shares, and definitely this might be quite debatable questions. But the other question that is more important at this very moment is the question about the U3 halt and the illegal actions from FINRA. And if these illegal actions will be proven in court, it means that someone will have to pay damages to all of the shareholders. And that is why, guys, we are looking for this resolution, and in a minute I will show you what type of resolution potentially we might have. But for now, let's take a look on this tweet, and I covered it yesterday. Peruvian Bull wrote this 2 days ago. Going to do a podcast with Susan Trimbath tomorrow. What are your questions for her? Comment below. And this podcast was quite interesting. I want to show you another tweet that was written by Peruvian Bull just 8 hours ago. And he wrote, one of the best takeaways from the podcast with Susan Trimbath: it's not a naked short crisis, it's a failure to deliver crisis. If you can fail to deliver on even a borrowed short or just a normal stock sale, that means phantom shares can be created anywhere by anyone. And guys, this is a very deep and important statement, because to be honest, if someone cannot deliver shares in time, and for now we have T+2 rule. This means it opens a Pandora box of illegal actions for any type of activity basically on the market. And how we can, how retail community and how authorities in the first hand can solve this problem. Let me show you this. John Burder reposted the tweet that was written by Susan Trimbath just 9 hours ago, and she wrote, one example on how mandatory buy-ins can work to end failures to deliver. This is from Singapore. And here is the screenshot of the rules of Singapore Stock Exchange. And I have to admit that this is the strict rules how the failure to deliver positions should be closed. And basically the only way how the companies can do it is to buy back these shares, and this means it will be more liquidity on the market that will cover these positions until their deliveries. And this is the only way how authorities can solve this problem within a blink of an eye. But unfortunately, neither FINRA nor SEC want to do it at this very moment. And guys, let's take a look on another news that is extremely important in our case. You know that we have two RICO cases, and one of them, the first one, was filed by Mark Basile and his company Intercoastal Waterways LLC as a plaintiff. As you can see, it was filed against TradeStation Securities and DOE defendants. On top of that, Financial Industry Regulatory Authority was filed as a defendant as well. And Phoenix Tabloid basically made a very good and thorough due diligence of the response of the basically FINRA's reply. And let me quote you what did he write. So, FINRA is seeking for dismissal with prejudice because the plaintiffs admit that 1. There is no actionable misconduct, 2. Fails to articulate any actionable misconduct, and 3. Makes no claim for relief against FINRA. They are just using FINRA as a technical argument. And by the way, all of his tweets consist the screenshots of these statements. Next one. Number 1. Plaintiff failed to articulate any legitimate reason for FINRA to be named in the lawsuit and made a fatal concession that FINRA is unnecessary to the outcome. They say they were just added so that they can challenge the mandatory arbitration section. FINRA says that Intercoastal and Basile law firm misrepresented FINRA's role, both generally and specifically with respect to this case. They say that the plaintiffs fails to understand that FINRA is not the arbiter. They just provide a place for parties to argue in front of arbiters, which are selected through a process of striking and ranking the arbiters by the plaintiffs and defendants. Which is like saying all we are doing is providing a space for you to argue. How can you say a place is biased? And guys, I think it is quite weak argument, but let the judge to make a ruling on this. Next one. FINRA uses TBLF's argument right back at them. If you argue that the court should rule without FINRA's participation, why are we, FINRA, even in this lawsuit? They contend. FINRA accuses the plaintiffs of either intentionally or unintentionally misrepresenting and misquoting. FINRA is not a party to the arbitration agreement, but the plaintiffs say they are. Also, they misquoted the SCOTUS ruling by changing a word, they point out. So, quite interesting statement. Next one. Plaintiff says FINRA is biased, but they give no evidence other than saying things that are speculative and conclusory. 2. Even if they are biased, time to bring motion to vacate is after the arbitration, not before. Also, courts across the country have rejected this FINRA is biased argument because they were all factually and legally baseless. Plaintiff failed to put forth any evidence showing that FINRA is biased, a federal court ruled. Says the only reason why FINRA was named here was to improperly avoid its mandatory arbitration agreement with defendant TradeStation that Anna willingly signed. Again, quite interesting statement. FINRA says TBLF tries to argue that FINRA's participation in this case is optional, even though they want FINRA to remain in the case. If it's optional, why should they remain? Next one, FINRA throwing shades at Mark here. TBLF unsuccessfully sought pre-suit discovery from FINRA in another jurisdiction based on similar conclusory allegations. The court should look at them skeptically, with substantial skepticism, they say. Lastly, jurisdiction issues. Seems like they are accusing the plaintiffs of making up connections to Florida so that it can be heard in Florida. For that reason, FINRA asks the court to dismiss the complaint with prejudice. So guys, quite interesting conclusions, but let the judge to make his ruling. And guys, take a look what did Mark Basile write in response to this thread. As you can see, he responded to the thread that was made by Phoenix Tabloid, where he basically made this due diligence. And Chloe BQ wrote, Mark, when's your price coming? And Mark wrote, it's coming, few days. And guys, don't you think that this statement is quite interesting and crucial? Because if Mark is preparing some kind of surprise that is related to this RICO lawsuit, I think he knows what he's talking about, and I think this surprise might be extremely interesting and extremely useful in our case. And that is why, guys, be prepared for this update, and for this case just subscribe to my YouTube channel and I will do it immediately when it is out. So, and for now, let me show you another news that was reposted by Anna. By the way, Anna is a part of this RICO lawsuit, as you might know, and she reposted the tweet that was written by Kevin Malone just 9 hours ago. He wrote, breaking news, the Securities and Exchange Commission today announced charges against 26 broker-dealers, investment advisors, and dually registered broker-dealers and investment advisors for widespread and long-standing failures by the firms. And he added a couple of screenshots. Let me show you them one by one. And as you can see, the fines are quite substantial, I would say. Price Financial Service agreed to pay a $50 million penalty. Edward D. Jones & Co. agreed to pay the same penalty, $50 million. LPL Financial LLC, $50 million. Raymond James and Associate, $50 million. Next one, RBC Capital Markets, $45 million. And guys, we have plenty of companies, and we even see some familiar names and familiar companies in this list. Cohen & Company LLC, $16.5 million. Piper Sandler, $14 million. Apex Clearing, $6 million. Truist Securities, $5.5 million. Hilltop Securities, $1.6 million, and so on and so forth. And guys, don't you think that it might be quite interesting case in general? Let me show you some comments under this tweet. So, Doug Pulte wrote, Doug Sipus firm was previously charged by the SEC in unrelated separate charges allegedly. It may have been for different reasons than this, but it's never good to get charged. And Kevin Malone wrote, Pull, do you smell RICO? And guys, this means if all these companies made basically they violate one rule, and if we can prove that they knew about each and every actions from other broker-dealers, this means it might be another RICO lawsuit against these broker-dealers. And this is another huge update for our case, not for our that is related directly to MMTLP saga, but to the case that should help the entire retail community to have fair and transparent markets. And guys, let me tell you my personal story. I have a wife and 2 children aged 11 and 15, as well as a small dog. After 30 years of living in Russia near the Baikal Lake, we decided to move. Now we reside in Serbia. Although I don't own any MMTLP shares, I invest a lot of time creating daily MMTLP videos. I have been doing this every day without days off and holidays for more than 1.5 years. Now I wish to buy back this time from my family, from my children. We've agreed that I will ask the MMAT community to support me, and I will give all the money to the children. Therefore, if you believe that I am providing useful content for you and wish to support me, you can join my Patreon account. For $5 a month, I will add your name to my list of supporters if you wish. Thank you in advance. The link you can find in the description below. So, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel, and see you guys and girls next time. Bye!
I got the cash in the bag, stay